Choosing potential multi-bagger stocks, stocks that can deliver returns many times their original value, requires thorough research, patience, and a focus on specific criteria. Here's a step-by-step guide. 1. Understand what makes a multi-bagger stock. Multi-bagger stocks often exhibit the following traits: high growth potential, operates in a growing industry or market. Scalable business model, can expand operations efficiently with minimal additional costs. Strong management, experienced and visionary leadership. Undervalued stock, priced lower than its intrinsic value. Low institutional ownership, less discovered by large funds. 2. Look for emerging sectors. Identify industries with significant growth potential such as technology, AI, cloud computing, semiconductors, green energy, electric vehicles, renewable energy, healthcare, biotech, diagnostics, telemedicine, consumer goods, premiumization, FMCG in developing economies. 3. Analyze financials. A company's financial health is a critical indicator of its potential. Look for revenue growth, consistent double-digit growth year on year. Profit margins, improving net and operating profit margins. Low debt levels, debt-to-equity ratio below 1 indicates financial stability. Return ratios, ROE, return on equity, above 15%. ROCE, return on capital employed, indicates efficient capital usage. Cash flow, positive operating cash flow shows the company generates sufficient cash from its core business. 4. Assess valuation price to earnings, PE, ratio. Compare with industry peers. Lower PE in high-growth sectors can indicate undervaluation. Price to book, PB, ratio, useful for asset-heavy industries. Look for undervalued stocks with PB, 1, PEG ratio. PEG, 1 suggests growth is not overpriced. Intrinsic value, use discounted cash flow, DCF, or other valuation models to find undervalued stocks. 5. Examine qualitative factors. Focus on intangible aspects that drive long-term success. Unique value proposition, products or services with a competitive edge. Visionary management, leaders with a clear strategy for innovation and growth. Moat, strong competitive advantage, such as brand, technology, or cost leadership. Market share. Expansion, the company should aim to increase its share in the industry. 6. Consider growth catalysts. Look for factors that can drive exponential growth. Sector tailwinds, favorable government policies, regulations, or trends. New product launches, innovations that capture new markets. Geographic expansion, entering untapped regions. Mergers and acquisitions, strategic acquisitions to fuel growth. 7. Analyze insider and institutional activity. Insider buying indicates confidence from management. Low institutional holding, less discovered stocks have higher multi-bagger potential as institutional interest can drive prices up later. 8. Study historical multi-baggers. Analyze past multi-bagger stocks to identify patterns and traits. For example, Asian Paints benefited from a growing middle class and strong brand value. Eicher Motors captured market share with its Royal Enfield bikes in India. 9. Patience and long-term perspective. Multi-baggers require time to grow. Invest with a horizon of 5 to 10 years and be prepared to endure short-term volatility. 10. Diversify your portfolio. Spread investments across sectors and industries to minimize risk. While chasing multi-baggers, balance your portfolio with stable large-cap stocks. 11. Regular monitoring. Keep track of the company's performance and external factors, like economic conditions, competition, and industry trends. Tools to identify multi-bagger stocks. Screening platforms. Use Screener.in, Trendline, or Ticker Tape to filter stocks based on criteria,